Hi, welcome back. It's time for us to get a little more technical and a little deeper into strategy. You see, not every stock is going to have a convenient pattern for us to trade. Head and shoulders, a double bottom, that's not always going to be there. And we need more reliable techniques that we can use in order to trade. And so in addition to finding those reversal patterns, those continuation patterns, we're going to use some trend following techniques, and that's what we're going to work on now. We love trends because they tend to last longer than most people assume, and that's why trend following has so many adherents all around the world. People love to follow trends. It's a great technique. A lot of very successful traders consider themselves trend followers. Now, in this particular case, let's assume that we're in a bull market. And we notice that the market is trending higher, so we want to jump on board that trend. We want to get long some strong stocks. And we know that we want to buy, but we need a plan that includes an entry, an exit, and a stop. And this strategy is going to be purely technical. So we know a little bit about fundamentals. We're going to use those later, but this one is purely technical. So we're going to run a technical screen using the free stock screener at finviz.com. Now, first, I'm going to give you the screening criteria. I don't want you to run this scan while the stock market is open. Run it after the close or before the open. Stock market is only open 6.5 hours a day here in the United States, so that leaves you 17.5 hours a day to run this screen. We want stocks that have a market cap of 2 billion or higher. We want stocks that have a beta of greater than 1. Now, what's beta? Beta of 1 means the stock is exactly as volatile as the S&P 500. We want stocks that are more volatile than the S&P 500. So by using a beta of greater than 1, we've eliminated a lot of stocks that just don't move, and they're not very useful to us. We also want stocks that are trading above their 20, 50, and 200-day moving averages. But it is important to note those moving averages do not need to be in order. In other words, the 20-day moving average does not have to be over the 50-day moving average. The 50-day moving average does not have to be above the 200-day moving average. That's something we'll take into consideration later. We also want stocks that have recently hit a 52-week high and are trading between 5 and 10% off of those highs. And lastly, we want a stock that's down for the day. So we're looking for good, strong stocks. But you know, even the best stock doesn't go up every day. It's going to have a down day. We're looking for a good stock on a down day. Let's take a look at how we're going to run this screen. Remember, we're on finviz.com, and we go to the screener, and we're going to enter a market cap of 2 billion or higher under the term descriptive. Then we change the term from descriptive to technical, and under technical we're going to find different sets. For example, stocks that are trading above their 20-day moving average, stocks that are trading above their 50-day moving average, and stocks that are trading above their 200-day moving average. Remember, we also said that we want stocks that are down for the day. We have that right here. And we want stocks that have a beta of 1 or higher. One more thing, we also want stocks that are trading 5 to 10% below their 52-week high. So we want good stocks that are trading near their highs but not quite on their highs. We could say that out of our criteria, 1 is descriptive and 6 are technical. No fundamental analysis on this particular one. There's just one problem. Under 52-week high, FinViz does not offer 5 to 10% below the high. The closest we can get is 0 to 10% below the high. What are we going to do? We can solve this very, very easily. Under the technical field, you'll see 52-week high, and all we have to do is click on that, and that's going to sort all of the stocks that have come up in our screen by their 52-week high. It sorts them in order, and then we just ignore any result that is less than 5% below the 52-week high. So again, we only want stocks that are 5 to 10% below their 52-week high. Now, once we have a group of candidates from our screen, we're going to chart them. We're going to look at each and every one of those stocks on a chart and determine if those are the ones we want to trade. Looking at charts, listen, chart analysis helps with experience over time. When I started work on a trading desk, as I mentioned before, my team and I, we would stay long after the close and look at many, many charts. Together, we'd go out and grab something to eat, we'd come back, and we'd sit for hours looking at charts every night. And believe me, it gets easier over time. Now, not every candidate from our screen is going to have a great chart. Let's take a look at an example of a chart that I did like. Here's a candidate from our screen that has a very strong uptrend, and it's pulled back slightly off that uptrend, but you can see that it very recently hit a new 52-week high. The moving averages, you can see underneath, the 20-day moving average is above the 50-day moving average, and the 50-day moving average has recently crossed above the 200-day moving average. They call that the golden cross, right? And also, the pullback has occurred on light volume, below average volume on the pullback, and you can see that at the very bottom, highlighted in yellow. So these are some qualities that I look for in general when I want to buy a stock. I want a stock that's coming down on light volume, has a nice steady trend. Okay, this is an example that I really liked from our screen. But I didn't like every stock that we ran from that screen. Here's one that really didn't come out too well. I didn't like this stock at all. Look at the chart. I see a head and shoulders forming. I see the moving averages are crisscrossing. The 20s cutting underneath the 50-day moving average. That doesn't necessarily disqualify the stock, but it's not a positive. And the stock pulled back on heavy volume. There was heavy selling on the pullback. That's a no-no. So again, using your charting sensibilities, you could say maybe this one is not such a great candidate after all. You see, charting is part art and part science. Not everyone sees everything the same way. It's really a game of pattern recognition, and it's important that you look at the charts before blindly going out and placing a trade. But now that we have a trading candidate, how are we going to enter that trade? Where are we going to put the stop? And how are we going to get out of that trade? Let's cover that next.